Hey, what's up, traders? Happy Friday. I have got myself into a bit of a pickle with some Tesla shares that I took on last month, but I think I'm going to be okay with it. But I've made some mistakes, and I only found that out doing live, pre-live stream prep. But I'm going to share that, and I want you guys to learn from it. Also, where I think the levels are going to earnings for Tesla coming up pretty soon. Of course, do a little update on Bitcoin, everything else, and your symbols to look at. So let's get it all in, and just if you're coming in later, skip past the music. If you're catching us live, just hang out, and I'll be right back, and we'll jump into it. Happy Friday again. How you guys doing? It's good to see you. Glad you could join us on this Friday. I'm going to talk about, as the topic for tonight, um, my Tesla covered calls, starting from the beginning, when I put them on. And, as I was doing my live stream prep, I was making a little spreadsheet to kind of explain, because I like to teach. That's what I like to do here. I like to, share what I know. And I'm going to be honest, I have never really done covered calls this big, okay, or on Tesla for that matter. And so I've kind of gone through a little bit of a learning experience, and I know enough, or at least I've gathered enough information over the years about options to understand why things turned out the way what they did. Basically, I bought shares last month, which we're going to go over when and where and why. Very cool setup, basically on June the 11th. Very standard setup, and I decided to try to earn a little bit extra, and that's what covered calls are basically going to let you do if you decide to do them. Is it being greedy? Maybe, especially on something like Tesla. But as this stock has just, well, frankly, yeeted itself up, I've had to manage that position because naturally, when you sell a covered call, now you are short that call, short that option, and if it goes beyond your strike price, now you have potential to lose money. But because it's covered, that means you already own the share, so you're not really going to lose money per se. You just capped out your profits. And I mean, I didn't get into Tesla to sell my shares, so I really wanted to kind of manage it. But also, if I wanted to, we could let it fall into the wheel strategy. And Simple G, he asked me to kind of actually, he last week I talked about the wheel strategy and I talked to Simple G a little bit more. He asked me to kind of elaborate on it a little bit more, I think. So we're going to talk about that. Also, Bitcoin. Had some cool discussions this week about it with some Bitcoin maxis who are really focused on a new term that I've come up with called hodltainment. What is hodltainment? Basically, when I've been pretty convinced, I've been confident since Bitcoin failed back in April of this year to really conclusively make a new all-time high, that was it. But I could be wrong. I could be wrong. So I kind of hedge that a little bit. I don't really go crazy, shouting it from the rooftops like I tried to do back in 2021 when the same thing happened, when it failed to really conclusively break up into the six figures, which everyone's looking for. And if it doesn't get there, there's clearly something wrong. But, people have lots of hodltainment that they like to read. And, the recent one is that all this is based upon Mount Gox and Germany and other such reasons to try to assuage their fears that a bear trend is not actually underway. It's actually, someone told me this week, these last few months have just been the whales holding Bitcoin like a beach ball underwater, and it's just, well, I mean, we'll see. But on the daily, as I've said for a few weeks now, the bear trend is confirmed. And I don't think it's going to go down to all the way to zero by any means, or even 10K or 20K, but it's pretty obvious to me, just in a kind of a karmic way, sort of an ironic way, that it's probably going to come back into the 40s, right where this recent hype started around the ETF. So many people bought after the ETF launched because because they thought that boomers were going to buy Bitcoin in their IRAs and whatnot. And it's just one of those kind of ironies of markets that those kind of narratives don't actually make people any money. And we'll come settle there. And I'm not saying people are going to lose money unless they sell, of course, because you can't make a loss unless you sell. But all this recent hype, all this recent euphoria, and I didn't really want to call it that because it wasn't incredible euphoria, depending on where you looked on Bitcoin Twitter, but it was not something that you wanted to buy. But if you read people's opinions that already own it, of course they're going to tell you to buy it because they want you to lift their bags. Also this week, I think that Michael Saylor announced there's going to be a 10-to-1 stock split on MicroStrategy. A lot of people disagree with this, but I think that long Bitcoin, short MicroStrategy is probably one of the most obvious trades out there. It has some risk associated with it because MicroStrategy is more volatile than Bitcoin. But it's when you're entirely correlated to an asset like Bitcoin that is as volatile as Bitcoin, and you're more volatile than Bitcoin, then that's kind of a dangerous thing to be in. But it also means that if Bitcoin starts to go down, MicroStrategy is going to go down more. And I really, really think that Saylor is going to blow himself up. He's not a convicted fraudster, but he's a settled fraudster in that he had to settle with the SEC more than 20 years ago for accounting fraud, doing basically the same thing he's doing now, which is, financial trickery to inflate the price of his company's shares. I don't believe in karma, but I do believe that people can't help be themselves. And, this stock split happening now is think about the stock splits that have happened in the last couple of months. You've got, or years for that matter. You got Tesla, Apple, Nvidia. I mean, some of those have split multiple times in these last few years, and they all do it like basically like Nvidia is doing a stock split. I have to look up when it's going to be. Did it already? Yeah, it already happened. But they announced the split when it was basically still well within its Yeet up, and it continues on. Tesla, same thing. Apple, all these things, all these companies do this right in the middle of their big run up. And so MicroStrategy, I mean, depending on who you ask, they'll tell you that like I said, Bitcoin's just in a little pause here. It's still in a massive bull phase. Just wait, bro. Hold on. Hold on to your seats. But it's happening now when things have really kind of settled down. And it's a really weird time to do a stock split. I mean, it's weird that it doesn't, it's very irregular. But I mean, what he's trying to do is he's trying to create a pump, both for his stock and for Bitcoin as well. Trying to lower this price so that he can get some more degen retail investors to start buying his options, buying his shares. But you know what it's actually going to do? If it's going to take it from, let's say $1,300 a share down to 130, that's going to put him very close. Well, not very close, but it's going to put him closer to that key level of about $10 to $12 a share, which basically is the dividing line between penny stock and investment grade as far as institutions are concerned. I think there's some listing for basically if he wants to be in ETFs and stuff like that. I think he is in the S&P 500 right now. But I mean, basically, if you get outside of that realm, you're going to get delisted from these ETFs, these correlated products that he's really depending on for money to come in. Now that's a whole 90% down, but if Bitcoin went into a bear trend, that's going to really happen. And so that's why I said I don't believe in karma, but I think he's really kind of positioned himself with lots and lots of debt on this very volatile asset for this black swan thing that he doesn't expect to happen or anyone expect to happen and blow up his company. And I just think that's going to happen. So we'll see. We'll see. But that's the news for MicroStrategy and Bitcoin this week. As far as Bitcoin price action, there's been a lot of news articles earlier this week about the recovery. Bitcoin recovers from price drop. It's recovered to prices that still have not really even actually recovered from the liquidation spike in June. In fact, that's provided quite a pretty solid resistance here. And what do we? Someone asked on Discord today, are we going to see that Friday afternoon dip? Not quite, but we definitely didn't have that pump. So we're going to see what happens going into the weekend. But there's not any bullish momentum, and I still remain short. I think I'm going to just keep on holding until we get down into the 40s. It's going to take a while. It might take a while. It's going to take a couple of these liquidations. But right now, the mood of Bitcoin, Twitter, and news and everything like that is of optimism. And yeah, when it gets to the point of fear, when that fear greed index goes away, then I'm definitely going to start considering taking some profit on the short. But we're not there yet. There's a lot of optimism, a lot of narratives. Just wait for this Mt. Gox sale to finish. Just wait for this Germany sale to finish. It's okay. It's okay. It's an evil conspiracy to get you to sell so that other people can buy it cheaper. Don't listen to this. Okay. Tell yourself what you want. All right. As always, if you guys have if you have questions or if you have symbols to look at, post them in the chat, and we'll take a look at them in the last phase of the live stream. But I'm going to share with you guys the covered call and what I've done, and I want you guys to learn from it. There's a very, very important takeaway at the end. Basically, you'll see. What's up, Brian? How you doing? Selling calls means being bearish on the asset price. What do you mean? It's like, no. So when you're doing a covered call, this is a good segue into it. When you're doing a covered call, you want to own the shares and make a little extra money off it. Now, you can do this on, if you want to make some money on your shares, you get a dividend stock, right? Because it pays a dividend. Every quarter, You get a little bit of extra money for owning the shares. That's one way to make money on your shares. But in a stock that's like a tech stock or one that doesn't offer dividends, a growth stock, if you want to earn money off of it, what you can do is you can periodically, regularly sell premium, sell options against it. So a call is a right but not an obligation to buy shares at a certain price. Okay, if you sell that call, if you write that call, that's the opposite. You give someone the right to buy them at that price from you. So you would have 100 shares because every option represents 100 shares. And then if you write a call at a strike higher, ideally, then you would be giving someone the right but not the obligation to buy your shares from you at that strike at that date or before. So that's basically what you're doing. You're basically writing a contract with someone that says, like, you can take my shares at this price on or before this date. Now, they probably don't want to do that if the price of the shares is below your strike, because then they would lose money. But if the price goes above that contract strike price, that's that share price they wrote the contract for, then they probably will. I mean, it'd be great if Tesla goes up to where it is now, 240 or 248, and they own a contract, an option to buy the shares at 220. Well, they're buying it for $28 cheaper. Of course, they'll exercise that. They will take your shares, give you $220 a share, and they will basically be in a pretty good position. You'll make money if you bought the shares less than 220. You'll make the money from the price you purchased the shares up until 220. That's how the math will work out, because you bought it at the price you bought it and you sold it at 220. That's all you're going to make, because you said, all right, you can have these at 220, and I'm not going to get much more from that. And that's the risk you take. The risk you take is that you don't make more profit. That's it. You're basically just capping out your profits. And you do this if you're bullish on the stock because you own the shares. You're not bearish, but you're saying, like, you're basically making a bet. I am bullish. I think it's going to go up, but I don't think it's going to go up that much before this date. That's the bet you're taking. You're not bearish. You're just saying, like, I'm bullish, but not that bullish. I'm bullish, but I'm not this bullish. Which is what I said back in June when I started this trade. And so, yeah, let's go through it. Let's talk about it. So, yeah, you're welcome, Radio. Can I say something about altcoins? Yeah. So altcoins. Before we go into that, I'll answer chat. I'm trying to get better about getting with chat, and before I really dive into this, because I know a lot of people don't care about stocks, boomer stuff. I like them both. In fact, I kind of like stocks better for the fact that you can do options and dividends, and they're not nearly as volatile. But to each their own. To each their own. So the main thing that I can tell you about crypto that you already know is that everything is going to be looking at Bitcoin. So if you want Litecoin to go up, well, you don't really have much hope. If you want Solana to go up, you're going to want Bitcoin to go up. Ethereum, a little uncorrelated, but still, you're going to need Bitcoin to go up. Basically, there used to be this concept that you hear a lot about, which is like alt season versus Bitcoin season. But everything's just, when Bitcoin went up, what it does is it gets everyone to go risk on. They want to take risk. They buy everything crypto. Just, it gets in people's minds. It gets in people's moods. It's called sentiment. And you have to have that to have any kind of pump in any kind of coin. Everyone has to be willing to throw money into crypto. They say don't put more money in than you're willing to lose, but let's face it, a lot of people just start throwing next month's paycheck into it because they want to quit their job because they hate it. And they're going to retire buying something with, 8, zeros in front of it, buying 1,000 of it, and yeah, it's going to go up 2 Bitcoin, whatever. Um, Now I will say this though. I made a post about this week. My favorite altcoin, and see, no one really cares about this. No one's paying attention to this key metric that I talked about. It's a little frustrating because I'm trying to really point out something I think is really useful. Most people just sit around and read Twitter and they talk about, oh well, don't miss out on Ravecoin. Oh where were you? Oh, you bought Ravecoin at 0.0000000087 legend. No. Monero is my favorite crypto because it is a privacy centric coin and it has been engaging in a secular bull run. It's volatile, but when I say secular, that means it's uncorrelated to Bitcoin. In fact, one of the key things that I've noticed, in the last couple months is that Monero versus Bitcoin, XMR BTC, has been, since April of this year, outperforming Bitcoin by, from that low right down there to up to now, by about 60%. So you remember, Bitcoin topped out in March, or at least, made a new all-time high in March, and then by April, it failed to really follow through on that all-time high, go up to 6 figures like everyone wanted to. And so in April, this inversion started on Monero and Bitcoin. Now, why Monero? Well, it could be that you can find this correlation in other instruments, but Monero has a special place in my heart because I like privacy. I think the cryptocurrency is about privacy in your transactions, in your wealth, etc. No, Monero isn't going to moon. It's not going to 10x in a couple of months. I don't need it to. I just need it to work. I just need it to be private. But the weird thing that's happening here is it's proving itself to be a better store of value in Bitcoin in bearish times. What do I mean by that? Well, we only have one data point to go on, but it's a big one. And that is the year of 2022, the bear market that everyone's familiar with, because let's face it, everyone that was probably going to go and get into crypto has gotten into it. Now you got to wait for Generation Alpha to make some money, and then they can get into the next cycle. But everyone that knows about crypto, they basically lived through 2022, 2 years ago. And in that time, starting in January of 2022 all the way to January 2023, Monero XMR BTC outperformed by 156%. This was when Bitcoin was going down. And granted, Monero went down too, but not as much as Bitcoin. That's where the outperformance comes from. Now, of course, in January of 2023, when Bitcoin began to start on this bullish trend, when I was posting about it as it broke out of the Ichimoku cloud, the same thing that it did back in last month to the downside, it did in January 2023 to the upside. That's why I like that signal so much. Daily Ichimoku cloud. Talked about it a lot. But it's very clear when Bitcoin went into a bearish cycle, Monero became the flight to safety. Why? I don't know. But I do know from a couple of different sources two things. Number one, those websites that sell gift cards, crypto gift cards, which it's questionable. If I'm not going to recommend you doing this, but I mean that's one way that people kind of let's say they obfuscate things is through gift cards. Those websites, Monero is the hands down winner, far and above Bitcoin. People are using it for. Why? Because you can't trace it. Same thing on the dark web. A lot of dark web websites only accept Monero. They can't use Bitcoin because it's cost prohibitive now with the transaction fees. And also Lightning Network, you have to sign up, you have to join a node or create a node, and that means that you have to put yourself out there pretty soon. You're going to have to register if you're going to run a Lightning node if a lot of these regulations pass. So it doesn't really satisfy that privacy thing that the dark web runs on. So there's actual use cases for Monero. And people keep using it through bear cycles to buy stuff and buy gift cards. So I don't know if that explains it all, but it's one possible explanation. But like I said, we've only got one very key data point from 2022 when Bitcoin entered into a bear cycle that Monero outperformed. But basically, since April, we're seeing that inversion again, and that's an indicator. And I really want people to know about this. I'm not saying that you need to buy Monero. I mean, on a long-term basis, Bitcoin is a better investment, but for an indicator of what phase crypto is in right now, I'm going to start using Monero versus Bitcoin. And right now, it's doing the thing. So, yeah. Zishan says, after reacting to Ichimoku very nicely for almost 2 years on a daily time frame, CHPT is out on the bullish side. All right, let's take a look at that. Yeah, well, okay, I'll get that. I get that in a minute. I promise Tesla. I promised I would be open and honest with folks about my Tesla. So let's learn about covered calls. All right, so let me get up. All the stuff I was going to show. So I simplified this for my spreadsheet, but this is basically where we started the position. So this was on June the 11th, and I'm going to show you guys what the technical setup here. I was actually pissed off that I got Tesla at 168.20 because all I asked for is perfection. And my buddy, who I was trading with, he got it even lower that day. But now it doesn't matter, does it? That just kind of shows you the mindset I was in, just like everyone else, on June the 11th, where we really didn't expect Tesla, after going down for a year at that point. Basically, it's funny, it topped out in June, July of 2023, and it's just been in a bear market. Even I get like into this, mindset. I mean, look, I'm the market, you're the market, we all are the market. But essentially, the best way to explain this setup is one of my classic setups that I'll always go back to. It is retracement levels, 50% retracement levels. What you had an earnings pump back in April of this year, pumped it up to about 198, almost to that key 200 mark, and he came back down to 168.80, that 50% level. This is going to be important because it's based around something real. It's based around earnings. And so that 50% level, I think I picked it up. Let's see. Let's go down to the 30-minute. So, yeah, I think I picked it up at 168.20, which I think was around this time right here on this little second dip. And I think my buddy, he got it maybe around 167.80. And I was like, oh, you beat me to it. But anyway, I'm in the shares. But on the same day, for reasons which were not a mistake, I decided to sell a covered call against these shares that I had because I had multiples of 100. And the reason I did that, I have this little indicator down here on this, which is Thinkorswim, but it color codes it for me. And essentially, this yellow line is average implied volatility. And then now that it's above it, it went pink right here. That basically told me that it had an IV rank of 86%, IV percentile of 97%. That's basically just relative to the last year. What does that mean? IV is high. Options are expensive. Let's sell some options. Let's make some premium. If you want to, let me see if I can help you out here. So Tesla IV rank. If you want to have an IV rank, you can just Google for it and find. That's not it. I found one earlier today. I think it's under unusual whales. Yeah. So basically, if you want to find the IV rank of a stock, use this website right here. It's pretty free, or you can Google for it. IV rank right now at 100. That's the highest it can be, 100%. That means every single day of the last year, IV has been lower. The percent of IV has been lower. So it's the highest IV that it's ever been in a year. That's what Tesla's at right now. For comparison, AMD, we'll go down to AMD volatility and IV rank. It's pretty high. It's at 90. And something, let's see, like GE, it might be high. I'm not sure. What's another stock? Just like Costco. How about that? Costco. Wait. I wonder if this website's kind of limited. Well, Intel. What? INTC. There we go. So it's at 92. So IV's getting pretty high for these tech stocks because they've dipped in the last week. That's probably why. Let me try another one. Costco, come on. Costco. All right, 23. Yeah, so that's pretty low. Anything under 50, under 50% means 50% is the average, and you don't really want to sell options when they're that low because you're not really going to get much premium. But when you get above average premium, you're getting a lot more premium when you sell it. That's when you want to do it. So there's nothing wrong with me selling when IV was high if I'm entering a position because ultimately it's a hedge. It's a hedge against just the stock going all the way down and you're not making any money off of it. It also lowers your buying power. Your what's the word? Your cost basis. Your cost basis. So let me bring up my little spreadsheet that I made for it to kind of go through the process. And so here's what I did. This is normalized for just 100 shares as things go along. And so basically on 6/11, I bought 100 shares. Let me zoom this in a little bit in case you guys are seeing it small. I bought 100 shares. A cost basis, if you're doing 100 shares, about $16,820. And at the same time, I sold the 220 calls for 3.3 premium. Made sense at the time. 168, sell 220. It's pretty far away, right? Well, as you see, as we got into this month, about 7.2, now the price is up to about $222. I'm above my call. And so I rolled. And what you do here is you roll to protect your position so that that which could happen does not happen, or at least is likely. If I had held on to this, I've had the 220s. At any point when it's above it, that person that I wrote that option to, they can exercise that and take my shares. I like my shares. I want my shares in Tesla. Maybe I should have thought about that before I did this, but that's okay. That's okay because I get paid to do it. I mean, I get basically by doing this roll. What I do is I roll it up to the 230 strike, get it out of in the money, and I go out from August like I did to October. Yes, October. So I'm going out 2 more months, but that allows me to collect more premium. Well, that doesn't stop. Tesla doesn't stop there. I got to do this thing again the next day. I'm going to be honest. I'm a little worried at this point because what happens is if you let this get away from you, if you get too far in the money, then it's going to be really hard, if not impossible, to roll out, and you're just going to lose your shares. So that's why you see me kind of degenning here, sometimes, and then later in the same day doing the same thing. But at the end of the day, what I end up with is, after doing these rolls, an extra $1,300, which is about 8% that I would have not otherwise had just owning the shares. Now I sit at June next year, which is not that great, 280, but that's the strike price I want. The reason is because 280 is where I really want to be, and then people that have been, trying to come to me and ask me about, well, what's the price I should sell options at? Hashtag not financial advice. I've been looking at 280 because that is a very, let me get off that. 280 is basically the last point before 300. 300 is really kind of more the obvious level to sell against, but 280 is probably, hopefully, going to hold through earnings. That is a very key resistance there. But man, this sell-off that we had this week, that makes it really healthy for earnings. I think probably we're going to end up, because earnings are coming out 23rd. Is that next week? Yes. No, it's 2 weeks from now. We got almost a week and a half for this thing to keep going up. It's probably going to. So I may have to do it again. But this is how I've decided to manage. Now, the other way to do this would be to just let it go and let the person have my shares at 220 and then start selling puts. I would make money selling the put credit with the hope that eventually the shares would come back to me. In other words, I'd be assigned those shares. For instance, if I were to have gotten them called away today, and let's say I just wanted to get my shares back at that price. Let's bring up the option chain right here. So let's say they took them away at 248. There was 35 days left, and so it might not have happened, but it could have. If we went out and did, let's say, the September 220 put, I could have made basically $1,000 roughly in credit. and then just sat there. And then if it comes back to 220, now I own my shares at 220 again. And plus I collected that premium. So that is one way to have done that. And then you get back in the shares and you can start selling the calls again. You do it over and over like a wheel. And that's why you call it a wheel. But here's going to be a little takeaway. It's kind of interesting. I've just explained all this to you guys of what I've done to earn that $1,300. No, Brian, I wouldn't up my volume. I mean, I keep doing the same, either 100 shares or multiples of 100 shares. And by the way, you don't have to do this on Tesla. You can do this on anything that you own 100 shares on. Rolling shares. Did I say rolling shares? Rolling means that you basically roll the option, which is a word for you buy back your sold shares. You close that position, which is at a loss. But then you sell another option that's a higher price for more credit, and basically you pocket that difference. And that's how you're able to make more money going further out in time and higher up, because options with more time built in are going to be worth more. And so if you sell an option, let's say for $100, you got to buy it back at 150. You're losing 50, but then you're going to sell for 200. You actually made 50 in that process. And you can sort of do this forever if you need to, but you just keep going out in time. I mean, who knows? By the end of this thing, I could be all the way out into 2026. At that point, I may just let the shares go away and then wheel them back, but we'll see. But let me show you something kind of interesting. So we can use Think Back and Thinkorswim, and let's go back to that date, and let's punch in this little back trade right here. We're going to do the August 230. No, it was 611. Sorry, August 220. Sorry, I'm going to sell that for. I got 330 for it because I got early in the day, and then let's go to today. So today, remember how I'm in the June 25 280s where I want to be? What I would need to do is I would need to buy back that 220 for $36.50, $3,650. And then I would sell the June 280 to capture $46.97. So that's what happens there when you roll. You buy back the one that you sold. So you basically take a loss of about $3,300, but you're making about $4,700. And so that's why you get that difference. And so what does that end up being? So 330, well, let's do minus 330. Remember, credits are going to be negative, but just think positive. Think positive. Plus 36.52. And so that's going to be $33.22 or $3,322. But I'm going to offset that. I'm going to sell credit of $46.97. And so I would be at a credit of $1,375. But wait a minute. After all that work, rolling 5 times, basically the same thing. Why is that? Well, I'll tell you why that is. Tesla being at Tesla is a unique situation, and this is why. Because there has been so much IV expansion from when I started and when I rolled that doing it today, the options are so much more expensive. I'm able to get so much more credit this late into this bull cycle because it's Tesla, because earnings are very, very soon, that this is what has happened. Normally, if you want to keep the shares, you need to keep yourself out of in the money if you can. But because IV is so much higher than it has been at any point I've been rolling over the past few weeks, I could have just done it today and had the same amount. But I didn't know that. But that's just kind of an interesting way I wanted to share with you guys. I didn't make a mistake on this. I didn't make a mistake, but it's just the way the situation happened. I could have either defended the position as it went along, or I could have just waited until now and done the same thing. But I wouldn't have known that IV was, well, it's Tesla. I guess you could have known that IV was going to be up. Anyway, if you decide to do this, if you decide to make a little bit extra money on your shares, you can either go into it with the plan of wanting to wheel it. In other words, if it goes in the money, you're just going to let it happen, let the shares get assigned, and then sell a put to wheel back in. Or you can do this where you roll out and up further in time to try to keep your shares out there. So what is the trade that I'm in right now? The trade that I'm in right now is I don't think that Tesla will go past 280 before next year. I actually don't believe that. So I'm probably going to have to roll these again. We'll see. We'll see. But that's okay. That's okay. We made money. It's a pretty good setup right there. Good technical setup. So, all right. Any questions about that? Any questions? I'm actually going to quickly get to your question, Zishan. And then I'm going to actually wrap it up because I have somebody working on my car and I need to attend to that because I'm going on a little trip this weekend. CHPT, ChargePoint Holdings. Ooh, buddy. This is one of those EV stocks. Yes, it's out on the bullish side, but Zishan, I'm just going to be honest with you. This is one of those things where if you own this, if you're just starting this out, how I would play this is such. I think Tesla is probably driving this. Maybe. I don't know. I would play this as a trade. In other words, you're going to get to a certain point. What I'm going to do, let's do a little volume profile analysis. Let's see where some key levels here. I would probably just, because we're not really getting much volume in this down move, I'd probably set my target at 566. Yeah. And I would just try to capture maybe a possible run on it. But as far as investment grade, I mean, God, that's... I think someone asked me last week about Rivian. They said they owned it at $10 a share, and they were considering selling it at $15. And I said, nah, Rivian's a company that I'd like to own. But the thing about like these charging companies, this is my fundamental opinion. I own a Tesla, and I use the Tesla, superchargers. Not only do I have free supercharging because I purchased my Tesla, but also they're very well placed. They're fast, and they're going to be pretty cheap. And so I'm never not going to use these Tesla superchargers. And a lot of car manufacturers, Ford, Mercedes, I think maybe even GM, they've already entered into licensing agreements with Tesla to use their supercharger. Now, that doesn't make me happy as a Tesla owner. That I'm going to have to compete for non-Teslas. But, EV has gotten a really bad rap in the last couple of months. You remember when EV back in 2021 was going to be the future? Do you remember that? Remember when oil was going the way of the dinosaur? When everyone thought that oil companies were going to go bankrupt? Back when, ExxonMobil was, trading below its book value, below 50 in 2021 because oil had gone. Well, people are like people are very wrong about things, okay? And I mean, we all know that at some point cars are going to have to change. Now, it could be that cars are going to go more hybrid internal combustion engines. They're just really, really more efficient. That's entirely possible. A lot of people just don't like the idea of the range on electronic vehicles. I don't blame them. You have to spend a lot. You have to get a Tesla basically to get any kind of really good range on an EV car. And a lot of people don't want to do that because they don't like Elon, even though he's launching rockets in space that are reusable, putting up Neuralink that can, play Civilization 6 on Emperor difficulty and has a higher brain to computer bandwidth than any other attempt combined. What else is he doing? But yeah, fuck that guy, right? He's a billionaire. He's not really doing anything. I'm just on Reddit and I'm just going to complain about him. Anyway, a lot of people just don't want to buy Tesla for that reason. But cars are going to change. But what I don't think is going to change is I don't think that these retail charging stations are really going to do very well, and that's reflected in the price. I could be wrong, but what was it? Plug Power was another one of these. I mean, people got really, really excited about these things, but I mean, they all look the same because Tesla has a better product when it comes to these charging stations. I as an EV owner, I can tell you that I've gone to a hotel that had one of these things. In other words, I was looking for a hotel on a road trip one time, and it said it had charging. I was like, oh sweet, let's stay there. I get there and it's one of these charge things. It's one of these I have to pay for it. And I'm like, nope. I'll hit a supercharger in the morning, which is free, and I'll be on my way. I'm not going to use it. So I didn't use their service. And that's going to be the choice that I think a lot of people might make. So, because a lot of these things are not superchargers, that you'll plug them into them overnight. Maybe that saves you some convenience, but I just made that choice. Maybe it was the wrong choice if I paid for it, but it is free for me. So we'll see. We'll see. I can't be bullish on these things, but if you want to trade it, if you want to try to get one of these big pumps, like you'll see some of these things for once in a while. Like when this thing was going down, plug power back last year, May up until July. Did that hit a 50%? Might not have, but let's see. Oh yeah, it did. So that's why I was saying. There you go. That's exactly what I was telling you. So when I see something like this, I'm going to look for a 50% level to try to get it, and I'm not going to try to turn this into an investment. I'm going to say, okay, some people are getting excited. Some people are buying it because they think it's going to go up. Don't drink the Kool-Aid. Play it up to 5.66. Hashtag not financial advice. eBay. Anything else, you guys? Get it in. eBay looks good. Let's do a weekly here and let's see where it stands. That's bullish. I like it. I like eBay. That's trending bullish. And target on that, we'll just do a 50% of the trend up. So you're pretty good all the way up to 58.67. What we got on volume profile? Ooh, what's stopping you right now is this point of control, this volume profile node at 54.94. I'm going to actually wait this because it's showing you a lot of stalling at this 54.94. If you can break above that level, I think this is going to break, and then you're going to basically make a run for the high. So I like eBay bullish. That's pretty good. IWM, that's going to be Russell, right? Yeah. So that's what a lot of people are trying to play right now. That's what I think. You asked me my opinion on it. A lot of people are looking at the S&P 500, basically the big stocks, and they're like, whoa, this has gone really far. I want to get something cheap. And they're looking at the Russell, small cap, small businesses, as going to be the next thing, which there's some reason for that. You basically kind of later into a bull market, the small businesses will actually start to perform. And because there's more volatility, you'll get more performance. I'm okay with that. I think that we're definitely in a bull market. I've seen that this week. A little quick recap this week. I only took one trade, and that was on the ES this week. It was a pretty sweet trade, honestly. We had the CPI report this week on Thursday. It was yesterday. And it made a very, very clear spike to the upside. I caught it on... Thought I wasn't going to get filled. There. I got filled as I was driving yesterday. 56.92 and played that down. Took some profit down at 46, 45, 46. And then closed it out this morning just in time for this stock market to show us exactly how bullish it really is. Could not be killed. Spike to the downside. That's why I love my spikes. By the way, if you want the spike indicators, nothing fancy, it just shows things like this, really powerful reversals, send me a message on TradingView or Discord. Links are below. I give it away for free because of how powerful it is. Basically, it's just when people swing price one way and it snaps back the other way, especially on news events like this morning and yesterday morning, you can see it with your eyes, but the indicator just kind of helps. But love it. So great trade this week. Going short in a bull market, but the ES survives. Bull market. So eBay 50% from the COVID low. What is that? Or are we talking about eBay still renovate or something else? Why do you stay away from Drew and Baba? Because the Chinese Communist Party doesn't actually like capitalism. I don't. I really think my opinion on any Chinese stock that people bring to me, including Alibaba, is there are thousands of American companies that do not have the CCCP or CC, whatever it is, Chinese Communist Party, um, with their finger on the scale. And I'm going to make money in those things because I saw a good friend of mine get absolutely. I'm a little bitter. I didn't get wrecked on it, but a good friend of mine got absolutely wrecked on Alibaba back around here, January 2021. And this was around the time that Jack Ma disappeared, probably because he was trying to launch Alibaba's finance platform, and the Chinese government did not really like how influential this one person was becoming. And I'm speculating here, but there's a van that came by and said, "Hey, Jack, we need you to come with us." And they had a little nice long couple week long talking to. And you haven't really heard much of Jack Ma recently. I'm thinking he's alive, right? Is he? I don't know, but I remember this little when Alibaba started kind of pumping and back in 2020, 2021, and the Chinese government came in and basically said no. And I don't want that extra risk. So there's plenty of other stocks out there that are not based in China. Sorry, just not interested. You're welcome to, but that's my opinion on that. Just I got Tesla to play. I got to manage this covered call situation that I'm in, man. I don't got time to worry about the communists. All right. So all right. So what is it? The COVID low is 50% from the COVID low, like in terms of yeah, numerically. Well, it's up 100%. But the COVID low was a really, really good level in these last couple of years, especially in 2022, in 2023 when things started hitting it again. It's always going to be significant, that COVID low, as we go into the years, but it's becoming less significant. But really in eBay, your two levels right now are 54.94 and 58.67. So watch those two levels. I think you're going to be good for bullish if you can break above it. In fact, you've got this spike right here that is kind of holding. But man, if you get a breakout here at, let's say 55, 56, that thing's going to be good to go. So, all right. Thank you for spending the Friday afternoon. I've got to run, but I will not be back next Friday, but I will be back on Friday, the 26th of July. So until then, trade wisely. Links down below for the Discord and ask me any questions and talk in the community. So have a good weekend. See you guys later.